Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. By the end of yesterday, the euro fell by 25 pips. But risk appetite in the market continued to grow. The S&P 500 rose 0.38%. The yield on 5-year US government bonds held steady for the third day at 3.95%, and the dollar index posted a symbolic gain of just 0.03%. On the daily chart, the signal line of the Marlin oscillator is starting to wind around the zero line. Price may consolidate above the 1.0762 level support. Risk appetite and buying pressure for the euro remains strong, so we maintain our scenario of a rise toward 1.0955 and potentially 1.1027 as the main outlook. A sustained move below 0.762 could still push the price down to 1.0667. On the 4-hour chart, the Marlin oscillator is also neutral. While the price is developing above the balance indicator line, it's a red line on the graphic. The pair could gradually decline to the 1.0762 support without breaking below the balance line, then rebound and head higher through the MACD line. Whether the rally begins from current levels or a rebound of support, the condition for further growth will be a consolidation above the MACD line. It's a blue line on the graphic. Today, this level is at 1.0816, but tomorrow it could shift to 1.0800. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 79 pips, which is considered as moderate for this currency pair. On Wednesday, April 2, we expect the pair to trade within the range limited by 1.2843 and 1.3001. The long-term regression channel has turned upward, but the downtrend remains intact on the daily time frame. The CCI technical indicator has not recently entered overbought or oversold territory. The GBPUSD pair continues to follow a medium-term downtrend, while the 4-hour chart shows a very big correction that could end at any moment. We still do not recommend long positions, as we believe the current upward movement is simply a daily timeframe correction that has already become technically illogical. However, if you trade purely on technical signals, long positions are still valid with targets at 1.3001 and 1.3062. Though keep in mind that the market is flat regardless. Sell orders remain attractive, targeting 1.2207 and 1.2146, since the daily timeframe's upward correction will eventually end. The British pound appears extremely overbought and expensive, but it's difficult to predict how long the dollar's Trump-driven decline will continue. That's all for today. Wish you best of luck.